Hello, welcome back. We're at PDAC and it's day 2. I'm with my favorite silver company in Bolivia. That's New Pacific Metals, and I'm with the president and CEO, Andrew Williams again. Andrew, good to have you back on the show.
Pleasure to be here, Peter.
We caught up, I think, what was it, Beaver Creek? Was it Zurich? Yeah.
Beaver Creek?
Beaver Creek.
Yep.
So that's back in September. What's happened since then?
Well, shortly after the conference, we announced a financing. So we, in a very difficult market, raised Canadian $35 million with very good participation from our strategic shareholders, Silver Corp and American Silver. Silver Corp put in US $5 million, Pan American Silver put in US $10 million. It went in excess of their pro rata, as well as some institutional participation. So altogether, a very good show of support for what we've got ahead of us as a company. And so we are in an enviable position in this tough market to not have to worry about our balance sheet, at least here in the short run. Right? That amount of cash is sufficient for us to achieve our near-term objectives, which is to continually de-risk and progress Silver Sand and Corangus to the point where they're development ready. So very fortunate to now be in a position financially to execute those plans.
Good. And just remind people where you're located and the current resource and I guess state of play in Bolivia with the 2 different projects.
Sure. So we actually have 3 projects. Our most advanced Silver Sand project, our intermediate project Corangus, and our 3rd project Silver Strike. However, we focus mostly on our first 2. Our flagship, and all 3 projects located in Bolivia. They're all 3 projects we've made organic greenfields discoveries the old-fashioned way. And our most advanced Silver Sand project, the one that brought us to the country in 2017, we've drilled 135,000 meters. We released a PEA study at Silver Sand last year, highlighting a 14-year mine life, producing an average of 12 million ounces of silver a year and low cost, $10 an ounce on its sustaining, $700 million NPV, 39% IRR, sub-2 bit. It's a fantastic project. Silver Sand is one of the best, if not the best, undeveloped precious metals deposits anywhere in the world. And so we are progressing this year towards releasing our pre-feasibility study at Silver Sand, really tightening up the economic parameters there from our PEA study. Our 2nd project, Corangus, we drilled it in 2021, made a 2nd major discovery, and released our resource estimate. When it would just before I talked to you at Beaver Creek.
It was, yep.
News there. And it's big. It's Silver Sand's a 200 million ounce deposit. Corangus is in the indicated category, 560 million silver equivalent ounces, and there's another 110 million ounces in the inferred category, silver equivalent. But the silver component is both similar to Silver Sand, roughly 200 million ounces of silver. And so this year we're progressing. We can get into some specifics further on in this conversation, but we're working towards our PEA study for Silver Sand, or for Corangus. Yep. And then at Silver Strike, we're continuing to keep that project on pause this year to focus on our 2 main projects.
Okay, good. I love the fact that you're just focusing on those 2 because there's enough in the ground there to be advancing those. But obviously 35 million in the bank. How are you divvying that up between the projects? Because obviously one's a bit further advanced. Usually the further advanced projects to get to the next economic stage takes a little bit more cash. But at the same time, you've got a bit of a behemoth there at Corangus. So how are you going about the exploration model and advancing the 2 projects simultaneously?
Yeah, I love the question because we're still trying to figure it out.
Yep.
And the way you characterized it is the way that we've been talking about it for a while, which is Silver Sand is this nice, tight, high-grade, high-return project with roughly $300 million of capital needed to build it, something that we could plausibly finance and build ourselves, whereas Corangus is 5 times the amount of tonnage as Silver Sand, and so it will take a lot more capital, a lot more financing, a lot more complexity, and therefore we move Silver Sand forward as our number 1 priority and look at Corangus to do just enough to keep pushing it forward, but not with the necessary conviction that we would a silver sand project where we could credibly finance and build it ourselves. But we're looking at more recently, and just being open with you, we haven't yet released any specific numbers. I won't talk specifics, but we're starting to say, well, what about if Carangas could be more silver sand-like? So again, order of magnitude, Carangas is 250 million tons. Silver sand's roughly 50 million tons. But when you look at the Carangas resource model, and we've got some slides in our corporate deck and in our technical report where you can see that it's not a homogeneous system. Carangas has got a very high grade, or relatively, I should say, high grade silver deposit right near surface.
Okay.
And then there's a transitional zone in the middle, and then a nice gold zone at depth that you could mine as a monster scenario with a very high NPV. But what if we just focused on more buildable Carangas, and maybe we just focused the lion's share of the attention on that near surface silver zone? You'd have a project that would be much more similar to silver sand in scale. Therefore, again, we haven't done the work, similar amount of capital, and you'd have two projects going that could both be plausibly financed and built by us. Of course, we pick the winner.
Yeah.
But and so the work that we're doing right now with the Carangas PEA, we're having these philosophical discussions. Do we go with the project philosophy that maximizes the NPV but requires more capital, or do we go for the one that optimizes a little more for IRR but it's more financeable and buildable? And of course, in that latter scenario, we still retain the optionality of expanding down the road, but at least it's something that it's the scale where it could be more of a New Pacific scale project for us to finance and develop, rather than just committing ourselves down the we need a partner track.
Well, I was going to ask, could you not do both, given that you could definitely focus on silver sand yourselves, but then you have quite large shareholders already that have operating experience? Could you not potentially do one, you guys focus on silver sand and bring in a partner to help you develop a much larger scale where obviously, like you said, the NPV is going to be quite substantial, so maybe getting a split of that versus the whole thing, if then someone else is progressing it for you, could make sense. So you've got optionality there, I assume.
Yeah, they're not mutually exclusive, but like generally speaking, I mean, my experience in the industry is that the more control you have over the outcomes, the more value you can create to your shareholders.
Okay.
There's just so many unforeseen issues, scenarios that can arise that the more control we retain, the better off we are. Not being said, if there's an offer or an outcome that makes sense and is compelling for our shareholders, like I'm a shareholder and I want nothing more than to do what's right for myself and my fellow shareholders. But
Good.
It's just another option on the table, and it I think it helps with that. If we go down that scenario, it also helps us be able to convey, get a little bit of a kickstart on the permitting process, because being something that is a scale and a scope that we can say, hey, we could be the ones to develop this. So, anyways, long story short, you asked about prioritization, where maybe when we spoke back in September, it was silver sand would be the majority of the focus, but now with this new potential philosophy at Carangas, where we could have more of a silver sand scale project, I think we might get into a situation here where both projects can move forward and at a similar pace. So
Good.
It's evolving, but it's a really good story, and it's evolving for the right reasons. We're trying to be more thoughtful about how we move our projects forward. So I think we probably look for maybe a more equitable split between the new projects, pending the release of our PEA study by the middle of this year. So I'm getting a little bit ahead of myself because we haven't put the numbers out yet, but just, I guess, priming you for the potential for that to happen.
Good. I wouldn't mind actually just going back onto the PA of silver sand, and you were talking about a very low ASIC there, around $10. How's that possible?
Grade, a strip ratio, and recoveries.
Okay.
So silver is less intuitive. I feel like there's just so many gold projects. Let's talk gold equivalent. It's 2.4 million ounces of gold at 1.3 grams per ton. 3.6 to 1 strip ratio, 91% recoveries, relatively low mining costs as far as per ton moved. We've got quotes from contractors. Power in Bolivia, we're US 5.5 cents a kilowatt hour. Okay. There's fantastic local labor available. It's a mining country. So you factor all those things together, and it just, the math works out. I mean, the grades really is the big kicker. Grade is king, but it just boils down to, that's what spits out at the end of the calculation, and it all makes intuitive sense when you build it up from the bottom up. It's funny. Guys refer to the project as one that would have been mined in the 90s at $300 silver or $300 gold, $5 silver. It's those kinds of economics, but the project was just discovered
a bit later. Yeah. Okay. So just talk me through, because obviously I know you're still delineating whether or not it sounds like you're doing a bit more of an equal approach to these projects, and you're still evaluating how you're looking at Carangas. But over the next 12 months, what can investors and those potential shareholders be looking out for? Obviously, you mentioned another PA coming out soon, but I'm just really trying to get my head around, obviously, whilst you're still figuring certain things out, what do you know for sure that we should be expecting?
Yeah, for us, it's progressing our project, de-risking them, and trying to build that core foundation of value, which is our resources and our reserves. So going from an abstract drill hole into something that's been fully engineered and permitted is a significant value creation exercise. It's your proverbial Lassonde curve, where you're at the trough, and as you continually de-risk your project and make it closer to reality, we see that value creation. It's very, very time-tested empirical phenomenon. That's the path that we're on right now, and so splitting it between our two projects, Silver Sand, it's getting our PFS done. We've done some more metallurgical test work that we're still incorporating into the revised PFS, as long as some more detailed engineering work. And so as we tighten up those economic parameters, in parallel, continue working towards obtaining our environmental permit. We've got a community agreement that we're working towards. We've got an MPC agreement, which ties on a parcel of contiguous land or a silver sand project. All these little pieces of the puzzle, we're slowly snapping them together and building a project that is one step closer to becoming a mine. And in that process, that's how we drive the value for our shareholders. And secondly, at Carangas, which I think is probably a little torquier in the near term, because we put the resource out. We feel like we're just not getting any credit for Carangas, and perhaps part of that is like, well, it's such a big resource, how could you ever plausibly finance it and build it as a mine? And firstly, that's still, these things happen. Our mining industry can pull off incredible things, and a big Carangas scenario is certainly one that could also look attractive, but also focusing, maybe there is a smaller scenario that we can do and scale it and showcase that with good economics this year, and highlight that what we found at Carangas is actually a real discovery, and it has the grade and the strip ratio and the metallurgical characteristics to one day become a mine. I think there's a lot more near-term opportunity for us to solidify that story, and then again, in parallel, work with the community, get the agreements signed, make advancements on the permitting process. Like, we are going to kick those up a little bit more at Carangas this year, collecting some environmental, social baseline. So pushing both projects together in parallel with a balance sheet that is sufficient to support that project advancement, with a very strong and supportive strategic shareholder base in a country that is opening up to foreign investment. Bolivia is in a position right now where the economic situation is somewhat challenging, and the government gets it, and we are seeing them make it's a subtle but decisive shift towards embracing private investment, of which mining has historically been the go-to for the country during more challenging economic times. It's been through these cycles before, and we're certainly sitting there in pole position, having 3 discoveries, 2 of which are advanced, 1 of which is really advanced. We put over $60 million US into the ground, discovering these projects, moving them along. So we're feel very fortunate to be in the position we're in today. And I think that's what our shareholders can expect from us, is to continue checking the boxes in a methodical and diligent way as we move these projects more at the same.
Good to hear. Andrew, thank you for your time.
Thank you very much. Always nice chatting.